Today, we are going to treat the bi-weekly FinTech law briefing as also an episode of the Tech Intersect Podcast. So settle in, settle back. I'm going to do this recording and then I'm happy to stop recording and then take your comments, questions, concerns, and discussion items on afterwards. All right. So hang tight with me and I'm going to count myself in to start this episode and we will get started. 3, 2. Hey, everybody, welcome to the Tech Intersect Podcast. I'm your host, Dr. Tonya Evans, a law professor and blockchain expert who is passionate about breaking down the complex intersections of law, technology, and innovation. And today we are diving in to a really interesting topic, definitely pulled from the headlines, and it sits at the fascinating crossroads of politics, finance, and technology. We're talking about the Trump family's latest adventure into cryptocurrency with the dramatic unveiling of World Liberty Financial token. It's a token project, and what this means less than, at this point, 50 days before the 2024 presidential election. So this episode is part of our Electing Crypto series, where we explore the intersection of crypto politics and economic policy. And the emergence of World Liberty Financial isn't just a financial move, but it signals an increasing entanglement of political power with emerging digital financial systems, particularly in the difficulties around regulation and lack of regulatory clarity, I'll say, in the crypto space. So as we dissect the motivations behind the Trump family's move, it's also crucial to consider the broader political narratives. Vice President Kamala Harris, for example, has indicated she's open to integrating cryptocurrency into her opportunity economy platform, not directly hearing from the presidential candidate, Vice President Harris herself, but from very, very senior advisors on her campaign. And I think her approach to Web3 and DeFi, if calibrated to align with her overall economic strategy and policies within the opportunity economy, really could reshape how Democrats, independents, and others on a bipartisan basis could approach financial innovation in the new economy. So we are certainly witnessing the dawn of a new era, regardless of the outcome in the election, with respect to financial innovation. But could it be a strategic political play with deeper implications for the United States policy, economic policy, I should say, and then in particular looking at World Liberty Financial, exploring how that fits into the Trump campaign and how a Harris administration might leverage the same technology for very different outcome. So a little background: on September 16th, 2024, in a move that caught the attention of both political and financial insiders, the Trump family introduced their new cryptocurrency initiative. It's actually a decentralized finance project, as I mentioned, called World Liberty Financial. And the launch, done on Twitter, or as I guess the new folks call it, X, attracted over 100,000 live viewers and more than, I think, about 450,000 replays streamed by the next morning. But despite the spectacle, World Liberty Financial's messaging was vague, and its promises really lacked the detail one would expect from a serious financial innovation, particularly with an announcement of this magnitude. So, as I've outlined in previous discussions, crypto projects tied to political figures often serve more as attention-grabbing plays than real attempts to drive financial transformation, particularly in a hotly contested political season. So World Liberty Financial appears to be no different. And while former President Trump spoke broadly about the need to embrace cryptocurrency. The event was short on specifics. It had more concepts or plans than actual plans. The governance token, for example, that they plan to release is restricted to accredited investors. So that's something that we did learn. That really should be a red flag for anyone hoping this project would democratize finance or even advance the narrative of the democratization of finance in DeFi. And as I mentioned in my article, can a democratic crypto policy reset drive economic justice for the middle class? This move plays into the old model of financial exclusivity that benefits only the wealthy few. And I'll talk more about that in a moment. But at a high level, in contrast, Vice President Harris could take a different approach, using DeFi as a tool for financial inclusion rather than creating another avenue for elites to consolidate wealth. And so Harris's platform already focuses on the needs of the middle class and the working class, and incorporating blockchain technology and innovation as part of the overall strategy and platform really could strengthen her policy of economic empowerment. Her vision of what she calls the opportunity economy aims to support financial innovation, but could be done in a way that benefits everyday Americans, something that the exclusive nature of World Liberty Financial certainly does not offer. Now, interestingly, Don Jr. and Eric Trump, as well as Barron, played key roles, or they played key roles. And specifically on the launch, it was Don Jr. and Eric during the discussion that talked about the philosophical principles of DeFi and how it aligns with American ideals of independence and self-reliance. It framed DeFi as a way to decentralize power away from traditional financial institutions, which they claimed have become too powerful and corrupt. I also offer to you an article that I wrote for Forbes recently. You can go and search my name and see all of my commentary on my Electing Crypto series. But when you compare former President Trump's Agenda 47 and connections both through Trump and J.D. Vance, who wrote the foreword for Project 2025's Visionaries book, which is interesting, despite the purported distance between the two. That's actually a highly centralized set of agendas kind of moving things forward in a way that is antithetical when you think about the cypherpunk ethos and spirit of crypto generally, and Satoshi Nakamoto's focus on peer-to-peer value exchange outside of traditional power structures, particularly with governments. So an example of this is limiting participation in World Liberty Financial to accredited investors. It creates a gated system that serves the wealthy, which is hardly the decentralized utopia that they claim to support. And as I pointed out in another article, Reimagining the Democratic Approach to Crypto, DeFi really should open financial systems and not, gate them behind regulatory walls. And Vice President Harris, by contrast, might champion a more inclusive approach to DeFi. Time will tell when we start learning more about not just the campaign strategies at a high level, and but also now issues and policies are constantly being rolled out, all aligning with this idea of an opportunity economy. So Harris's focus on bridging economic gaps, for example, could push the technology in a more ethical and equitable direction. Additionally, Don Jr.'s rhetoric about DeFi has an extension, or as an extension of what the founding principles intended, is an attempt to align crypto with a certain political narrative. But as we know, decentralization in finance must be about more than rhetoric, and certainly in alignment with a particular political strategy. But when we think about freedom writ large and true financial freedom in particular, it really does require the removal of systemic barriers, something that the Trump family's version of its cryptocurrency project does not seem to address at all. And this is where Kamala Harris's opportunity economy could differ significantly. And instead of framing crypto as a tool for the already wealthy, she could use it as a means to close the wealth gap, to provide financial services to underbanked and unbanked populations, to support with remittances. I wrote about this in how a Kamala Harris administration could and should usher in a clean slate for crypto regulation. I believe that was for Fortune magazine. So in that article, I discussed how Harris could focus on creating regulatory clarity, fostering innovation, and promoting financial inclusion for sure. Now, one of the more critical legal elements that stood out to me during the World Liberty Financial launch was its reliance on the SEC's Reg D or Regulation D exemption to sell its governance token. And for those unfamiliar with Reg D, it allows companies to raise capital without registering securities with the Securities and Exchange Commission, or the SEC. And the proviso there is that the securities are sold only to accredited investors. And this effectively limits participation to individuals with significant financial resources, either $200,000 per person or $300,000 per couple. And that would exclude valuation of a primary residence. So, that focuses on fewer than 14% of the population. And I've previously explained how Harris could break from this exclusionary model, particularly given the impact, probably the outsized impact in this this political cycle for the important crypto vote in key swing states. There's an excellent poll done by the Digital Currency Group, or DCG. Full transparency, I am a member of the DCG board, but done in concert with Harris, nonpartisan polling group. And that poll showed that crypto was top of mind for crypto voters, those who hold some crypto assets across 6 key swing states. So these folks are already looking for leadership on this issue. Pushing for a more inclusive policy would allow the average American to participate in the Web3 economy, kind of powered by crypto assets and distributed ledger technology, is separate and apart from the wins for an elite financial group. It's actually one of those few issues or topics that could be and promises to be a win-win for both. And so from that perspective, and again, thinking about the opportunity economy, Harris could introduce policies, for example, that update these outdated accredited investor rules. I know President Obama attempted to do so through the Jobs Act. I believe back in, I don't have the actual date in front of me, so I don't want to guess. I think it's around 2012, 2013, but do not hold me to that because I don't have those numbers in front of me. But, the broader point is introducing policies that continue to update outdated accreditor investor rules, allowing more non-accredited investors to access financial innovations without the attendant excessive risks in a volatile nascent asset class. So by implementing financial education programs and safeguards, her administration could provide opportunities for everyday citizens to invest in emerging technologies like blockchain. And this approach stands in stark contrast to World Liberty Financial's elite-only structure that would resonate with a broader base of voters, particularly middle and working class communities that have historically been excluded from such opportunities. So this is the first time that the Trump family has been involved in financial ventures that raise questions about conflicts of interest and the hint of impropriety. Now, during Trump's presidency, his family's business dealings in foreign countries, such as Ivanka Trump's trademarks in China and Jared Kushner's financial ties with Saudi Arabia, were often scrutinized, and rightfully so, because these ventures illustrated how the Trump family has consistently blended political power with financial gain, often benefiting a small group of insiders. And World Liberty Financial appears at the present time to follow the same pattern. And so we should be extremely cautious about championing someone who is saying, make crypto great again in America, the crypto capital, the Bitcoin capital of the world, when it is might be all hat, no cap. Let's just keep it at that. And focusing specifically on the governance tokens exclusivity, the vague details shared during the launch, it suggests that this is less about financial democratization and more about creating a new revenue stream for the Trump family, and continuing to raise unbelievable amounts of money from the crypto industry. As I noted in Electing Crypto 2024, the crypto community is highly skeptical of such initiatives. And if Harris can present a clear policy shift, what we're looking for, I coined the phrase proof of pivot. So we could, and I do not see that happening in this hyper condensed presidential election, where she found out about 6 weeks ago from the time of this recording that she would be at the top of the ticket, and has this other little day job that you may have heard of to be vice president of these United States of America as well. There's quite a bit going on in the world. So to run full time, to serve the interest of this country under the leadership of President Biden, and to also at the same time forge her own path is an outsized ask for anyone. But anyway, ultimately looking for policy initiatives, shifts away from choke point 2.0, away from regulatory overreach that we see from the SEC under the leadership of Gary Gensler, away from that, and toward a narrative around crypto assets and blockchain technology to support small businesses and entrepreneurs and middle class and working class Americans, instead of using this new technology to enrich the few. Her administration could foster public-private partnerships to develop blockchain infrastructure for the public good. And this wouldn't only build trust in the technology, but also to ensure its benefits are felt by all Americans, not just the wealthy and the wealthy few and the politically connected. So when I think about the broader impact on cryptocurrency's reputation, I'm also deeply concerned. The Trump family's involvement in World Liberty Financial has broader implications for cryptocurrency's reputation. So if the project is seen as just another example of a political family using crypto as a grift for personal gain, it could set the industry back even further than Sam Bankman-Fried did when we think about the crypto contagion years. And crypto, I talk about in my book, Digital Money Demystified, that cryptocurrency already struggles with its own reputational crisis as the Wild West industry, rife with fraud and speculation and dubious actors and rug pulls. And World Liberty Financial does little to dispel these concerns and could further erode public trust. So in contrast, a Harris administration would have the opportunity to restore faith by championing responsible innovation, creating a regulatory framework that promotes transparency and accountability. I've argued that a Harris administration could lead a new new economy 2025. Before I even heard of her talking about the opportunity economy, I was always already focused on the new economy, where blockchain and cryptocurrency, artificial intelligence, decentralized AI are integral parts of a more equitable financial system. So by focusing on financial education, regulatory clarity and inclusivity, Harris or any future administration should be repositioning crypto as a tool for economic empowerment rather than its speculation. Additionally, Harris's potential embrace of crypto in her opportunity economy could present an inclusive narrative that resonates with middle and working class voters. I envision, reimagined policies that could leverage blockchain to lower remittance fees, to promote decentralized lending platforms, and support innovation in financial services for underserved communities. So incorporating blockchain and crypto into this idea of an opportunity economy platform could allow Harris to take a bolder stance on the future of financial inclusion from the perspective of those who seek to benefit by fostering decentralized financial systems that bypass the systemic gatekeepers that have prevented the masses from accumulating wealth in a way that actually really impacts current generations and certainly future. So, for example, let's think of an example. DeFi could provide small businesses with access to capital without needing to rely on traditional, often exclusionary lending institutions. Blockchain-based systems could allow individuals in low-income communities to participate in the economy in ways that were previously inaccessible. The campaign has already been engaging with these ideas. So pro-crypto Democrats have also pushed for these kinds of reforms to be a part of the broader economic policy. Jim Himes, Wiley Nickel, Richie Torres, Chuck Schumer, Debbie Stabenow. We've seen some real champions on the Democratic side. Even ranking member Maxine Waters during the DNC did an interview on Our Native Pod, and she talked about, in addition to artificial intelligence, but also specifically crypto and leaning into the future of innovation and new technology. So I think the moment in time, regardless of the outcome of the election, is critically important for this industry. And it makes me hopeful, but also exceedingly cautious. We don't have the luxury to get the narrative of inclusivity, the democratization of access to capital, the deep and abiding concerns about hyper-centralized power in politics and also finance and also innovation, technology, and the intersection, the trifecta of that we find ourselves in with crypto and DeFi. So as we wrap up this episode, it's clear that the Trump family's launch of World Liberty Financial raises serious ethical concerns, and even just the hint of impropriety, which is very dangerous for a political candidate, particularly with so few days left before the presidential election, about the intersection of politics and cryptocurrency. And that project's reliance on accredited investors and vague details shared during the launch suggest it may be more about personal financial gain than advancing financial innovation or inclusion, but the stakes are high. And the narrative around crypto is far from settled. Vice President Harris's opportunity economy offers a stark contrast to World Liberty Financial, and she has the potential to redefine the Democratic Party's relationship with and to cryptocurrency, using it as a tool for financial inclusion and empowerment by focusing on regulatory clarity, on education, and certainly innovation, not being at war with crypto, but one with. Ushering in a new era of decentralized finance that benefits all Americans, not just the wealthy few. So as cryptocurrency continues to evolve, the industry's success as a whole on a bipartisan basis will depend, either party, by both, on transparency, on accountability, on ethical boundaries, and what's in the best interest of the ultimate user, like really getting clear about how this is in the best interest of the person at the end of the supply chain, the person who is the user, the person who is the investor, the consumer, the builder. So I want you to continue to stay connected continue to advocate in a respectful and beneficial way, especially when politics and finance intersect. So as a reminder, for more insights and to stay ahead of these important conversations, please visit me at proftonyaevans.com. That's Tonya, prof as in professor, TonyaEvans.com, and also electingcrypto.com. I'll be updating that with new platforms, new articles, new resources. Everything is free. I'd love to hear your thoughts, to continue the conversation across socials. So all that information is in the show notes. Please leave your comments and share your perspectives. And remember, stay informed, be the smartest lawyer, leader, or learner, making the best decisions for your profession and also your portfolio. If you're looking for a speaker, a keynote, someone to train or consult or to advise, reach out at proftonyaevans.com. This year has kind of filled up, but there's still a few opportunities before year's end, and certainly booking for 2024. So please reach out to me at proftonyaevans.com to get the ball rolling. And thanks for listening or watching on YouTube. And until next time, keep leveraging your knowledge to make empowered choices. Thanks. Excellent. Okay, that is the recording and also the FinTech briefing for this week. And I look forward to seeing you all in a couple of weeks. You can check out this episode of the Tech Intersect Podcast wherever you get your podcasts, and also access through proftonyaevans.com. Thanks a lot, and I'll see you in a couple of weeks.